Good morning, everybody. Good morning. It is Wednesday, the 21st, 8:35 a.m. Sorry for the late start. I was trying to make a change to my account on TradingView and just ran into a technical difficulty, and then I was stuck and blah, 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 blah. So we were starting just a couple minutes late. We are probably going to have a pretty slow day in markets, most likely, with maybe the exception of crypto. It really depends on what's going, on a few things. But in the end, the FOMC minutes come out today. So I'm going to jump right into the content here. If you are interested in what we do, I'm going to throw up a QR code onto the screen here. If it's not already there, see if I can, there it goes. So you can go ahead and, zap that QR code, go to our website, algofactory.tech, and we'll talk about what we do at the end of this show. Then go ahead and go to the share screen. First of all, we'll take a quick look at a nice win on the screen here, and I'm going to actually move this around just a hair. Let's do that. Okay, so now you can see it a little bit better. You've got the nice win with BTC. I've got my stop all the way in entry. You can see, I'm going to zoom in a little bit here. Give me a second. You can see that I entered right here on Monday. Okay, now I did share this trade idea with my private group. Nothing we do, even in Algo Factory, is investment advice, nor is anything we say on the show. It's not to be construed as investment advice. You got to do your own research. That's whenever you're trading, that's risky. You can lose money doing that. In fact, you can lose all your capital trading if you're not careful. So we just give ideas. We don't give advice. All right. So, and this idea is one that I shared with my group. And you can see the stop loss is rather pretty wide for my own liking. I usually have tighter stops, but I understood what was going on. Right. And as you can see, the price did rally up just a couple days ago. In fact, I was in this show. It was yesterday. I take that back. It was yesterday during the show, and I thought that this might stop out. But, I did tell my private group, we're just going to stick with the plan. I'm going to stay in this trade. Everybody do your own thing based on your own research, blah, blah, blah. So I went ahead and stayed in the trade, and we can see what happened here. The stop loss that I calculated, and I did that calculation based on a lot of things that my Algo Factory group knows about. The stop loss I calculated protected me, right? Price went up to this area, as you can see, and went ahead and came back down. So there was just some liquidity up there that it wanted to grab. And Bitcoin is essentially still in a bit of a consolidation. Again, I think it's leaving that consolidation. And now that this trade has gotten to a certain point, I feel okay sharing that with everybody. And so, look, again, if you're going to try to trade something like this, you need to do your own research and make your own moves, right? This is not for you to just be copying, but this is what the range kind of looked like at the top. Looked like this. Bitcoin came up, and 53,000 is an important number, and I'm pretty sure price is going to go well beyond that. The price kept knocking its head really on about 52,500. You got a couple of deviations where price came out right up in this area here. And of course, this liquidity grab right there. But otherwise, price knocked its head on the top of this range numerous times. So you got, let me see, once, really twice, three times. This was the deviation up here. You got 4 times, 5, 6, 7, 8, 9, 10 times. You could probably say, 9 to 11 times, right? That price really knocked its head on the top of this range. It's extremely predictable. I could have taken a short, especially once it came up to this area right before I got in. I guess I probably could have taken a short, but the range wasn't quite as well defined at that point. There was this deviation here that made it not quite as pretty, but that's fine. I'm in a nice trade. I'm in a nice short, and it's in nice profit. And I took my stop loss and I moved it to entry. So the stop loss was here at the top of this blue box. So for those who are super new to trading, what you're seeing is I'm betting, if you will, on the price going down, right? So my calculations say the price will go down to 48,000. Actually, my calculations say price will go below this 48,400 price that you see on the bottom right here. But I go ahead and I get out before it goes down as far as I think it will go. And therefore, I can capture that profit, going short on this. So if you don't know about going short or anything like that, there is a great a great video over at Algo Factory, and I am going to sort of move that video around to make it easy for beginners to see. But there's a video called Trading Basics, I think it's called, the basics of trading. So that'll teach you literally what it is to go short, how that works in the markets, what the mechanism is. That way, for people who say, "How in the world can you bet on something going down?" That will give you that background. Now we do have to watch out here. It might be that, look, there is price, and this is why I moved my stop to entry, because you have this deviation came down to this. Let me see here. The deviation that occurred before I got into the trade back on Saturday, the 17th, that deviation went to about 50,600. And we do have two more times where price did deviate down there, once yesterday, and then again here right now. Price is out, moved down to that. So it's a good sign, I think, that price is breaking out of this prior range to go down, but price is being held up at 50,600. So before we head over to the economic calendar to take a look at what's happening today, I will take a look at the Kingfisher. And in the description of this video, you will find a link to the Kingfisher that will give you a discount if you use that link. So this is a great, if you use that link to actually purchase, what do you call it? If you can use that link to purchase the Kingfisher, which I think is completely worth it, especially if you can use all their tools. They have a lot of tools I'm not really showing on the screen that I use from time to time. For example, this GEX Plus. There's some more advanced tools in there, but you can get free spins, like I just spun that wheel that you saw, to grab what we're about to do right now, which is called liquidations. And without getting too technical in the beginner show, liquidations are just where price is probably going to go. What they really are is where people's leveraged trades might liquidate. Okay. Now, there are some liquidations still up at 52,600. So if the charts favor a move up, there are liquidations at 52,600, which makes a lot of sense because this wick went up to 53,000. The top of this range is 52,500. So of course, price may want to, a lot of people are seeing this structure, all those arrows that I put on, those down arrows where price hit its head on the top of that range. A lot of people see that as, okay, well, I could put a stop loss just above that because price isn't going above that. There's a lot of structure that's being created at this 52,500, the top of this box. And therefore, that's why you got at 52,600 a lot, not a lot, but a fair amount of liquidity up in this area. Now, as you can see, I wasn't greedy. I gave price a long way to go before it would stop out originally. Now that there is a little bit of liquidity up there, there's always that risk that price could go up, grab that liquidity, and come back down. However, right now, the charts do favor a move down, but Bitcoin is a wily beast. Okay, Bitcoin's a wily beast, so you have to watch out for it. It will go up. It will grab your money, grab the liquidation. So you gotta watch out for that. And that's why I have a stop and entry. And if it does that, if price goes up here, then I have an opportunity, first of all, get out of this trade risk-free. And if price goes up there, stops me out without losing any money, I could actually have a short up in this area and go ahead and look for an even better trade. So it's just a way to kind of reset your whole trade and have what is this, a 4-to-1? Basically a 3.8-to-1 instead of the 2-to-1 that I have right now. And what I mean by 2-to-1 and all this, what's gone on here is, let's just say that I risked $1,000. So let's just say at the beginning of the trade, if price went up to stop me out, I would have lost $1,000 in that trade. That's my risk, right? So let's just say, this wick, whatever, went all the way up, touched this price where my stop loss is, where I'm cutting my losses, I would have lost $1,000. But this is a 2-to-1 trade. It's actually better than that. It's a 2.11. If you can see it on the screen there, it's kind of in small writing right now, but you can see this 2.11 right there. And that means that for every $1,000, if price goes to my target and I don't take any profit here, which, I wouldn't, this isn't a profit line. This is just a structured line. So let me delete that. So as price goes to my target down here, I make $2,111, actually $2,110. So this is better than a 2-to-1. This means I am going to win twice as much as I'm risking, right? And anytime you do that, that means you can actually not even win half your trades and you can be profitable as long as you keep your risk to reward asymmetrical like this, right? You want to have it as high as possible. You'll find that with Bitcoin, it can be tough to get super high risk to reward because of the liquidity grabs, but that is the game. So for now, if price were to go up, take me out at my safety stop, go up and grab that 52,600. What actually I'm going to do is I'm going to put a line here, right? So if I go back to the Kingfisher, you'll see this little line right here, 52,600, 590, 52,700, but the spike is really a 52,590. Okay, so I'm going to go back to this trade and I'm going to put the coordinates to 52,590. Now, this is just where the liquidity is now. This can change, but I am going to put this line right here at 52,590 and I'm going to put it above price. That means I'm going to have to fix it again at 52,590. And this is just a little trick you can use with the Kingfisher. Is right now my bias is bearish, right? So I'm going to have an alarm sound if price goes past 52,590. I will know because I have an alarm here. Actually, I don't. I need to add. Oh, no, I have an alert. So I have an alert on my stop loss. I'll know if price goes through that and I'm out of the trade. But then I'm going to set this alert on that ray at 52,990 of look to create, or look to, let's put consider short, consider new short 52990. And this, I have the alerts. What's going on here? Okay, that's fine. So I will create this here. And it looks like somebody might have been putting their password or something in there. I don't know what that's about. Long story short, though, as price crosses that, I will get an alarm. And as long as my algos and everything else are favoring a move down, I can do a new short, right? I can take advantage of when price goes across that. So this kind of analysis, what you're seeing here, this is actually not that complex. I know it seems complex. This at this point to me is second nature. And everything I did here didn't even really involve algos. I mean, it did in the background. I used the algos to identify this short, but all of this trade management, this range trading, all this stuff that you see, the Kingfisher, none of that really involves strictly algos. I mean, I do factor those things into algorithms, but those are external data from my algorithms that I use to refine my trades. The trades themselves are actually pretty well algo. I will say that the original stop loss in this case was based on Kingfisher, but I would have just as easily based that on structure and using ATRs or, whatever that is. So it all equals out in the end. So that's that. Let's go ahead. Now, first of all, I'm going to, let you know if you're watching this, and if you're watching this on YouTube, you can you can request a chart, right? So feel free to say, hey, can I please have, I want to see an Ethereum chart. I want to see a Microsoft, whatever chart you want to see. I can do a chart. Just ask for it, even if you're not an Algo Factory member. Now, if the Algo Factory members are asking for charts, I do prioritize their requests, right? But even if you're just a member of the public, that's why this is a free to the public live lab. This gives you the opportunity to say, hey, what do you think is going to happen to Caspa? What do you think is going to happen to Solana, whatever, right? So that being said, I'm going to head up here to the calendar. Now here, the only event today is the FOMC meeting minutes. And this is why at the beginning of the show, I did say that I think we're going to have a bit of a slow day in trading. And that's because the FOMC meeting minutes, let's talk a little bit about what that means. First of all, you're looking at forexfactory.com. And especially if you're trading crypto, and especially if you're trading Forex, that's when this really matters. And I spend about half my time in the Forex market. I find the Forex market to be much easier to trade. Although most people say it's hard to trade, I find it easier to trade than most markets, but that's because I use algorithms and I'm a technical trader. People who are used to trading crypto because they're using news events or something, that's going to be different than trading Forex for sure. Now, Forex news events are something I use to basically stay out of the market until that news event is over. And when that news event is over, then of course you do get some volatility of which you can take advantage. Now, this is going to happen about 3 hours before the market closed, the FOMC meeting minutes. So as long as the effect isn't extreme, as long as there's no big surprises, there will be some money that goes back into the market, and perhaps there will be trades to make around that time of the day today. So that being said, what is to be expected on the FOMC meeting minutes? It's hard to say. We had a typical FOMC, which is the Fed Open Market Committee. That was what, 2 weeks ago or last week? I think it was last week. And what goes on with the FOMC? What is the FOMC? This is where the chairman of the Federal Reserve gets up in front of everybody and talks about what they're thinking when it comes to interest rates and whether or not they're going to adjust them. So they may adjust the interest rate. They might hike the prime rate, which the prime rate is basically, it's the Fed funds rate. It's the rate that everybody uses to determine what they're going to charge when they lend money. So, for example, the prime rate for, let's just say your mortgage rate, right? The base for your mortgage rate, the I don't want to say basis because that's going to confuse people, but the formula for what people are going to charge for their mortgage, right? What company's going to charge for their mortgages, the base the basis for that is it's the Fed funds rate, right? So if the Fed funds rate's at 5%, then the mortgages are going to be something like maybe 6.5%, whatever they are now. I think 6.5 or 7 is normal. I don't know. I haven't looked at mortgages in a while. Now, if the Fed funds rate goes up by 0.5%, then the mortgages are going to go up by something commensurate, maybe a little bit more than 0.5%, maybe 0.5%, whatever that is. So where the basic rate of the Fed funds rate, when that goes up, all of the interest rates go up. And that means that it becomes harder to borrow money. Now, most money is debt. So when money becomes more expensive, less money is created. And when less money is created, markets go down. So whenever rates are hiked, there tends to be a bit of pressure on the market. Now, that pressure could be temporary. Of course, they have been hiking rates to try to quell inflation, right? So whenever there's a meeting where they either hike rates or they sound like they're going to hike rates, then everything goes down against the dollar. Conversely, if they talk about cutting rates or if they cut rates, things tend to go up against the dollar, right? So, dollar weak, everything else gets strong. This is more of a perception thing a lot of the time, but that is how it tends to go. So the meeting minutes are going to give us, once they talk about it, they're going to give us some clues to the insights of the meeting that happened prior to when Fed Chair Powell got up and talked about what he talked about last meeting. And the last meeting, I think it was last week, he basically said that, we're not going to cut rates just yet. And today we're not going to do anything to the rate. But I think they said, we have some way to go. If I remember correctly, there's more, more inflation to tamp down on, which is a clue that they're not ready to cut rates yet. Okay. So, and that generally causes the market to go down. But the markets have actually been going up like for some time now. So, the hiking of rates is not really having as much of an effect on inflation as one might think. There are theories behind this. We are in an election year. It may be that the forces that run things are continuing to put money in the market to make it look strong. So we don't know. That's all conspiracy stuff, but these conspiracies do happen. It's not, don't think that conspiracies don't happen. Listen, just to get into your heads a little bit, a surprise birthday party is a conspiracy, right? It's two people or more who have an idea about a third person and they don't tell that person. Anytime you're doing that, anytime you talk behind somebody's back, especially if you're making plans, that's a conspiracy. They're not all bad, right? I mean, anytime you run a business and you have private information that you don't tell the public, technically that's a conspiracy if the public is buying your product. So we're not talking about conspiracy theories in the crazy tinfoil hat way. We're just talking about it in the purest sense of the word. So that said, we'll see what happens with FOMC. I think it's going to be a minor thing. I think that the FOMC was pretty strong with the way that it affected markets last week. So I think that whatever happens with today will probably be minor. Money will re-enter the market and we'll have some trading opportunities at that time if we're watching. Okay, so I don't see any requests in the comments. I do see a decent amount of people watching live right now. So if you do have a chart request, please name it. I'm going to move on over to Caspa because I know I did a video on Caspa. And if you didn't see it, it's actually my most popular video so far. And I did a video on what I think the next Caspa is, right? So I think that there's a new coin that is following a chart pattern. I mean, a technical pattern when it comes to like the way that they're, the way that their project is moving forward. There's a milestone that their project is hitting, and we think it's being hit, right? And so, while that milestone may be hit, and I haven't looked today to see if that's going on, then this new coin that is in that video, that coin itself may pop up. Now that coin's already a little bit higher than Caspa is, so I don't know how much room it's got to go up. But if you look at yesterday's video, I'll see if I can find the like the thumbnail or something for it. It's everyone talking about the next Caspa. Just go over to news and charts on the YouTube channel. You'll see it. In fact, what I may do, if I remember to, is if you're watching this particular video, not live, I'll see if I can link up to that in the YouTube channel. So let me just timestamp where we are in this video. We are now 21 minutes in. So I'll go ahead and put the link up in the top corner of this if I can remember to. See, 21, 29. Caspa link. Okay, so, and that way, if you're watching this, you can I'll link you over to that other video and you can see what I think that new coin is. Or just go to my videos. Just go to yesterday's, like the video, the recorded one, not the live one, and it'll tell you. So I think the Caspa, let me go to my more algorithmic kind of chart here on Caspa. So don't worry about all this gobbledygook. A lot of the stuff you're seeing on the bottom of the screen here, I'm not even using. So this might look crazy to you. Don't let it scare you. I've been doing this a long time, and all that stuff I don't even need. I'm just testing stuff. Now, Caspa, from what I can see, at least in the near term, it does seem like it wants to take a break, right? So there's a couple of ways we can look at what might happen. And I did address this in yesterday's video to a degree, but there's been a little bit more time that has gone since then. So I will readdress Caspa's price action. And Caspa's hot. It went from like 1 cent to 18, almost 19 cents. And it did that since July of last year. So you're talking about a times 18 in, what is that, July, 5 months to it. So 7 months. I mean, that's beautiful. You get a times 18. That's life-changing money if you happen to, have the guts to put a fair amount on that. But the most recent extension that has happened, that went from about 10 cents to 19 cents. So price almost doubled in this month alone, right? From, what is this down here? Really from, it's almost doubled. You don't get much closer to being doubled than that. So even if you just got into Caspa at the beginning of this month, that was a double. Huge win right there. I'd say the most likely place for price to go here is probably going to be down to about 13.8 cents, but it may not make it down that far. This big move, this entire extension right here is a departure from recent price action, right? So we'll look at the prior extension and I can show you how that worked. So this right here is an impulse on a high time frame. And if I were to do a Fibonacci extension or a Fibonacci retracement based on that, then the 618 is down at 87.8 cents or 8.78 cents, right? That's your retracement to the 618. Now I can additionally refine this data by using a volume profile. I have to give my computer a second to catch up. Remember, don't forget, says Lisa. Yeah, I'll do what I can. I wrote it down. So like where I write that down, I always look. So I should remember to do that. But Lisa, you know how to go to my YouTube. You're in our, I think you're in our group. If not, you're in one of our groups, if you will. So price didn't quite make it to the 618, and price wanted to go to about 8.87 cents, but it got front ran because Caspa was hot. It made it down to 9.2 cents. So price wanted to go down to the 618, right? So if Caspa remains as hot as it was back in November, and I think it might even be hotter right now, then we can take a look at the price action and plan on a front run again. Like we could literally look for entries. Because here's the thing, when something's hot, people don't get their entries. When something's hot, like everyone's like, it's going to go to 618, it's going to go to the volume nodes. Like, well, if everybody thinks that, then you might get front ran. That means that somebody else might think, I better get in it before everybody else, right? And they front run you. They get in early. So if I were to, look at a possible front run, now I use algos, right? So when something fulfills certain requirements for me, right, I look for the bounce, I look for the algo to tell me to enter, and that's the end of it. This could only go down to like 16 cents. It might grab, because if you look at the liquidity here, liquidity happens where price action stopped and consolidated in the past. And by the way, we are nearing the end of the public live lab, but I am going to continue because we started a little bit late. So I'm going to finish this Caspa look, and then we'll go ahead and move over to the private lab. We'll give the public their 30 minutes. So there is liquidity right here, right? Because price on the way up, let me zoom in so you can see it. There's a lot on the screen right now. So, but the actual area where price consolidated is right here, right? Where I'm marking this square. Let me code this yellow, make it easier to see. So on the way up, price stopped right here, and price might only make it here and then bounce up because there's a little consolidation. There's liquidity there, and if Caspa is really that hot, if it's really that hot, and I think it is, it's bullish high time frame, I can tell you that, then it might just grab liquidity and continue. You might never see it go even down to the 382. It might just stop here and keep going. That's possible. At some point, though, it will need to come down and grab some real liquidity, and there is real liquidity sitting right here from about 13.6 cents to about 14.5, right? Maybe a little bit higher than that. So that's where there's a decent amount of liquidity where price could, if it makes its way past that 382, past this little liquidity, if it's not hot enough to keep going, Caspa could come down and grab liquidity right there. Whether it grabs it here, whether it grabs it there, whether it keeps going down or up, I have algorithms that can tell me, it's like, okay, this probably is going to continue to go. If I want to try to ride Caspa, then it's time to get back in. So that's the beauty of building your own algorithm, because you can have something that you personally have built, right? Now, there's a lot of kind of trading services out there where basically they say, hey, follow my system and you'll be a millionaire in like 2 weeks. Like those are probably scams. I don't advocate following somebody else's system, right? I don't advocate that you use my system. Now, I am going to make my indicators that I have built, my algos built, available to the public very soon. They're already ready to go. I'm just going to talk to my web developers, and it's going to go up on the site and for sale, ideally within a week. So you'll have access to my indicators. I would think that the best thing to do is to develop your own system, even if you use my indicators, right? Now, Algo Factory does teach you how to develop your own trading plan, your own trading algorithm. And an algorithm really isn't very complex. Tying your shoes is an algorithm. Going to the store, taking a left at this street or right at that street, those are all algorithms, okay? So don't let that word scare you. If you develop your own trading plan, your own methodology, what has happened is you have gone through the past and you have spent a fair amount of time testing your trading strategy. Because you have tested it, you'll realize, hey, there are times when I lose a few in a row. There are times when I lose 3 in a row. There are times when I might even lose 4 or 5 in a row, right? Because you trade, what are you going to trade? A few times a week, maybe more, depending on your style, depending on your time frame. And you'll realize that, oh, there are losing streaks. Your equity curve in trading doesn't just usually go up. Equity curve means that, like, your account number, right? So you start off at $10,000, you make it up to 13. Maybe you might take a loss, a little haircut, go down to like 12. You make it up to 17. Maybe take a haircut, go down to 15 and a half. Like you don't just make it all the way up to 20 grand from 10 grand. You're going to kind of stop on the way. And these are going to happen when just things happen. You get streaky. You win 5 in a row. You win 6 in a row. All of a sudden you think you're God. You start breaking your own rules. That's another problem. There are many problems. And the psychological component to trading is something that we also talk about in the class. It's a three-legged table, like I like to talk about. This table will not work without any one of its legs. The first leg is your algorithm. The second leg is treating trading like a business. The third leg is your psychological component. And just as Cool Cat says here, learning how to lose is hard. You will lose. You will lose. There's no trader that has not lost a trade. Trades get lost. And a real trader knows how to stick to it. A real trader knows how to continue to trade and to know whether or not it's a good idea to continue to trade. And if you have built your own system, then that psychological component is built in. It is the biggest secret in trading. I'm telling you right now, there's no bigger secret in trading than what Algo Factory has to offer. We offer what works. I don't know anybody else that offers this. Okay. I don't know anybody else that offers what we offer. So please come on over, Zap QR code, top right-hand corner. Come visit us at Algo Factory. We're extremely cheap right now, $49.99 a month. Right. That's going to go up. But if you get in at that price right now, you will be grandfathered in. You'll be able to keep that price as long as you don't let the membership lapse. So we hope to see you over there. for the moment, I'm going to go ahead and hop off here. We're going to go over to the private, but come on over. Join us. Join us.
Or die.
Or die. Just kidding. There.
Join us or die.
Talking about you, though. We're talking about your account, right? Just kidding. Your account might not even die whether you join us or not. We're not saying you're going to be surely successful with us. We're not saying that you can't be successful without us. We feel that you will have a much higher probability of success if you work with us, if you want to be a trader. So that said, we're going to hop on over, trade your job, upgrade your life. We'll see you on the next one.